Welcome everybody to today's business support series. My name is Rhonda Pope. I'm with the Chamber, and today we are going to hear from Stephanie Kamp and Beth Black with Hagan Hamilton Insurance, and they are going to talk to us about Paid Leave Oregon, give us all the ins and outs. We're going to have a great Q&A, so feel free to ask questions. You may put them in the chat or raise your hand. And again, we are recording today's session, so we'll be able to upload the video and you can share it out after today's presentation. Welcome, Beth, and welcome, Stephanie.
Hi. Thank you, Rhonda.
Thank you for being here.
Well, thank you everybody for having us. Stephanie and I are excited to share a little bit about Paid Leave Oregon. We are both employee benefit specialist consultants with Hagan Hamilton Insurance. So that's really where our expertise and specialty lies, is consulting with employers and the benefits that they're going to offer their employees. Paid Leave Oregon was kind of thrown into the mix there. So we're catching up just as everybody else is catching up. So please bear with us as we do share the information as we start off a little rocky. That we have received from multiple carriers that we offer private equivalent plans through and through the state. The state's been offering a series of webinars every Thursday. And so Stephanie and I have attended a couple of those. We've also attended some of the meeting calls where they're doing rules and processes for Oregon paid leave. So we have been involved during the process to try to stay apprised for our customers. But we just want to preface that with a disclosure that we're not experts in this. We didn't create the plan. We're just sharing the information that we've learned and the details that have been shared with us as of today. And we like to say as of today because the state does make changes as the program is moving forward, whether that's definitions inside of the program or lengths of leave. And so as of today, this is the information we know. And so our plan is, Stephanie and I are just going to go through what is Paid Leave Oregon, what is it offering, what are the benefits, what are employer responsibilities, and some of the new stuff, like what are the claims processes and what should you let your employees know. So with that, our agenda is going to talk about paid leave, who and how, paid leave benefits, how long does that last, how much money can an employee get, filing a claim, what does that look like, coordination of benefits, because we now know you have Paid Leave Oregon, you have OFLA, you have FEMLA, and then if you're an employer who offers a short-term disability policy, you now have short-term disability all in that mix that would intertwine into one single event that could trigger all of those. So how does that coordinate? Employer obligations and responsibilities, what you should be prepared as an employer to tell your employees, and then private plans. If you chose a private plan, yay for you, because you got to take advantage of that tax holiday where you have not been paying that payroll tax to the state. You instead have taken a holiday where you're not taking anything out of your employees' checks, nor as an employer, until your private plan will start invoicing you, which is going to occur in the month of September. So we'll touch on that as well. So first of private Paid Leave Oregon, how and who. So it's for everybody. Paid Leave Oregon is for everybody as long as you've made $1,000 in a quarter. So that's every single employee. You can, even as a self-employed owner, opt into Paid Leave Oregon. So you can opt in that way as well. 1099 contractors can opt into Paid Leave Oregon. So it could be anybody who wants to participate in the payroll tax. And then if an employee has made that $1,000 in a quarter, that employee is also now eligible to file for claims and receive benefits under Paid Leave Oregon. And the way that those calculations are came up with is it's a 1% payroll tax for employees and employer on the state plan, split that 1%, 60% of that is paid by the employee, and then 40% of that is paid by the employer if you have more than 25 employees. If you have less than 25 employees, and these are belly buttons, so it doesn't matter if this employee is only working 10 hours a week, if belly buttons on your payroll, so that you would file on your Form 132, if you have less than 25 of those, then you as an employer are not responsible for the 40%. You would just tax your employees' checks, 60% of the 1%, and that would be sent into the state on your quarterly forms. How do you determine your size? It's a look back. So if you're on that border where you're like, well, I have like 26 employees right now, but over the last period, I was really carrying about 22. If the average is below the 25, then you can consider that you're not an employer who has over 25 employees and required to pay the 40%. Do I withhold employee contributions for part and temporary seasonal employees? Yes. So like, as I mentioned, every employee who makes over $1,000 is eligible. It doesn't matter if that person is only working for you for the summertime and that they're not going to be employed past the summertime. If they're an employee after September 3rd and they've made that $1,000, they can go out on claim. Now, when Stephanie goes over the benefits, their benefit payment is going to be calculated based on their income. So if they're not working full time, it's going to be based on the hours that they are working. But everybody is eligible. Here is just a little breakdown of what it looks like, because there is a threshold. So that 1% of your payroll is capped at $132,900. So that means if somebody's pay is above that, the most you're taxing at the 1% is up to the 132.9. So in that example over here, employee C is making the most at the 132.9. It's a larger employer, so it's 60% the employee pays, 40% the employer pays. That breaks down to $1,329 in annual premium. So that's the 1% of this income. And then how is that broken out between employer and employee? The employer is going to pay $531.60 of that, and the employee is going to pay $797.40 of that. So accumulatively, that will be the premium that they paid in to Paid Leave Oregon. Or if you're on a private equivalent plan, whatever that equivalent rate is at, and Hagan Hamilton had some great success with some of our customers that got down to like a 0.61% instead of the 1% state rate. So whatever that percentage is, then the math would be used to split that 40-20. Any questions on this? I don't see any. This is kind of old news. This isn't new. This has been the same since it was rolled out.
For the Paid Leave Oregon benefits, Beth already covered who's eligible, all employees, whether they're part-time, full-time, temporary, or seasonal. But also for the benefits, they're eligible, or eligible workers can receive wage replacement benefits for the below leaves. So we've got medical leave, which is your own serious health condition. Safe leave, this would be family violence, sexual harassment, stalking. And then there's family leave, which is broken out into two parts: for child bonding or caring for a family member with a serious health condition. These benefit durations can be up to 12 weeks or 14 weeks in a 12-month period. 12 weeks is the general amount of time that a member can take leave. And the additional 2 weeks to come up with that 14 is for an employee with a pregnancy that resulted in some complications. Go ahead, Beth, you can switch. The leave duration can be in increments, or it can be in the full 12-week period. So the minimum increment would be 1 day at a time, with a maximum of the 12 weeks. The benefit years are 52 weeks. So your leave would begin the Sunday prior to your leave. And then that's when your year begins. It's not going to be a calendar year. It's going to be based off of when your leave began. For chronic conditions, a new application will be required to be filed every year. And then if you have separate conditions throughout the year, let's say there's family leave that you need to take 3 weeks for, and then further on down the year, you need to take another separate leave for your own medical condition, you would need to file a separate claim.
And I'll add that this is being tracked in the Francis portal that all of you employers probably have already signed up on. So if an employee uses, let's say, 11 weeks with you, and then they leave employment and go somewhere else, it will show that they only have 1 week left within that 52-week period. So they can't stack leaves from going employer to employer. The Francis portal will track the total 12 weeks or 14 for pregnancy complications and not allow more than that in a 52-week period.
Thanks,
There's
Beth.
some watching there.
The paid leave Oregon benefits will be paid every week while a member is on leave. And the amount that a member gets depends on how much they've earned the prior year. So some employees could get 100% of the benefit and some employees won't. So this example below is from the Oregon Employment Department, and it shows a minimum wage employee who makes roughly $28,000 a year would get the full benefit of $540 a week. A median income employee making $67,000 a year wouldn't get that full benefit. You'll notice that the annual earnings weekly income is $1,289.58 on the median income, and then the 1 week paid leave benefit is $1,057. So that employee is not made whole. Same with the high income employee. They would get a portion of the weekly benefit, but not the full amount. The minimum weekly benefit is $63.48 with the maximum of $1,528.63. That is the example that was provided by the Oregon Employment Department. They've also stated that the paid leave Oregon contributions are going to be after tax contributions on payroll, but the benefits, even though they are taxable, they will not automatically be withheld from the benefits. The Oregon Department of Revenue recently released a statement regarding the paid leave tax contributions and deductions, and they posted that on their paid leave website. Beth, is that you?
That was me on mute. Okay, so the $1 million question everybody has, as the plan is about to come to fruition and you can start submitting claims, what does that look like? So it's supposed to look like a 30-day notice. So if an employee knows that they're going to go out on leave, they have a surgery, they have an ill family member they have to take care of, it's a non-emergency, they are required to provide 30 days notice. So there's come to you, the employer, and say, Mr. Employer, I have a leave coming up and I'm going to need to take off such and such time. You as an employer then simply direct the employee to either the Oregon Paid Family Leave website, where they can then create their account on the Francis portal. Or if you have a private equivalent plan, you would direct the employee to that private carrier. And then from there, the employee is going to submit claims where, however, the private plan will accept, whether that's via phone, paper claim, web. And then for the state plans, you actually are eligible to create your own personal account. So as an individual, not an employer, but as an individual, August 1st. And as of August 14th, you can start submitting claims on the Francis portal. So if you're on a state plan and that 1% has been coming out of your paycheck and you're going to be eligible to receive paid leave Oregon from the state, you can submit claims on the Francis portal starting August 14th. And so I just wanted to take us to this little hyperlink. If it will click, there we go. And take us to the Paid Leave Oregon website, because not only does it have all of the information that you would need to submit the claim. Oops. Isn't this what always happens when you try to do something? There we go. When you want to submit the claim, it's specific. So this link takes you to Time for a Family. So I have a leave coming up that is specific to me needing to have a baby or an adoption. So
Beth,
this,
it didn't take you to the website.
it did for me. Can you see it now?
Yes.
Okay. So here we are on the website, and this website has a wealth of information. So I directly went to filing for a leave under employees, applying for a family leave, applying for a medical leave, applying for a safe leave. Each one specifically tells you what's going to be needed for that specific leave. So if I'm going to do a safe leave, what does that cover? Sexual assault, domestic violence, harassment, stalking. What documents are you going to need for me to submit for my claim? So every piece of information that an employee may need to submit their claim on their behalf through the Francis portal is all here on the Paid Leave Oregon website. They even will take you to the Francis portal where you can create your site. So that's a separate site. So you go to Oregon Paid Leave. This is where you would direct the employees to. They would from there find out what information is going to be needed to submit the claim to the state, and then go directly to the Francis portal, create an account, and submit the claim. The claim will then be submitted and processed by the Oregon Employment Department. So that's who's paying out these claims. They've said, and we'll share on an upcoming slide, that if they have all the documentation in hand, they're hoping their turnaround time is going to be 2 weeks. So we'll all keep our fingers crossed for that. So again, this is the site to refer your employees to. So as employers get questions from employees as the date is nearing and they're like, well, how do I file a claim? How do I use this benefit? Go to Paid Leave Oregon, go under employee, choose the leave that you're specifically wanting to apply for. And from there, it will give you all of the information that you need. Okay. Let me now share back my PowerPoint. And we wanted to point out too that the Oregon Employment Department, OED, will also take a paper application for those who don't have a computer access or want to do it online. That will delay the processing of the claim though. As mentioned on the Oregon Paid Family Leave website, even with private plans, proof is going to be required. Documentation is going to be the same whether you're on the state plan or a private plan, but documentation will be required, whether that's a birth certificate, adoption, those police reports, medical records, whatever it is requested for the type of leave that you're taking, documentation will be needed. And then noted down here, the Oregon Employment Department will make that reasonable effort to pay the claim once they've received all of the documents that are needed. And then lastly, you have the employer. So the employer circles back here at the end, and will need to let the private plan or the state know the anticipated return to work date for the employee. So the employees let you know, I have to go out and leave. I need this many weeks. They're going to deal with the claim and the payment process with the state and or with the private carrier, but you as the employer still needs to know when your employee is coming back to work. So they will ask for that information from you. What proof? This is again in detail to submit a claim because we want to be clear. So if employees have this documentation gathered and submitted at first submission with the claim, then going back and forth and delaying payment will be cut down drastically. So if it's for your own serious health condition, it's pretty much like disability insurance. So you have to have a note from a doctor saying that you cannot perform work, you cannot be at work for this length of time. That's all that's needed for the medical claim. If it's bonding with a newborn, that birth certificate, bonding with foster or adoption, the paperwork that goes with that. And then the safe leave is a little bit more detailed. But if you have the documents that are required up front and you submit them all at the same time, the efficiency of being paid should increase substantially. The private plan carriers pay disability claims on a regular basis. So their turnaround time is going to be less than a week. The 7 days, if you have all your documents, T's crossed, I's dotted, in 7 days, you can have an EFT check put into your bank account. So you can get paid quickly as long as you're visiting either the Oregon Paid Leave website or you're talking to your HR person and they're directing you to your private plan website that lists what's needed, then you can submit and get paid. Claims processing. So these are some questions that come up and there will be more. And again, we recommend joining the webinar that the state is going to put on Thursday, because after their short presentation, it is like a solid 30 minutes of Q&A. And the Q&As are just very specific. Like, I have an employee that's going through XXX situation. How is this covered? So I don't miss it. I suggest, and if you can't make that one, there's one the next Thursday. But a common question is, what happens if an employee is out on STD and they're not back and Paid Leave Oregon comes into place? Well, Paid Leave Oregon is first. It's first before short-term disability. It is primary before any other kind of payout. So if you have an employee on short-term disability today and they're not going to return by September 3rd, they need to be filing a claim with Paid Leave Oregon or your private plan so that they will be set up to receive those funds through Paid Leave Oregon. Now, if their short-term disability payout weekly benefit is higher than what they're receiving from the state or the private plan, they will work together. So example, if I am that high income earner and I'm maxing out at $1,500 and my employer's STD policy offers an $1,800 weekly benefit, then I'll get $300 from the short-term disability policy still, while I'm getting paid for Paid Leave Oregon. So they'll both work together. So if somebody's on short-term disability, they don't just want to ride that out. Paid Leave Oregon is primary come September 3rd. Can paid family medical leave be taken intermittently or on a reduced leave schedule? So it can be taken in increments of 8 hours. So it has to be a day. You can't take hourly or half a day. It has to be a full day, but you can do it incrementally. If you have a plan in place for the duration of the 12 weeks, you can submit that up front. Example of that is you have an aging parent and that aging parent needs care, probably indefinitely. And during this time, you're taking Tuesdays and Thursdays through the 12-week period. If that documentation, supporting documentation, shows that your parent, family member needs your help and care, you can set the intermittent leave to do that Tuesday and Thursday through the 12-week process. If you only needed a week because something had occurred, you could then take your other amount of time later. So it's not all taken at once, or you lose it. It can be taken intermittently, or it can be taken on a plan, all 12 weeks at the same time. Can an employee who is out on maternity leave before the program starts wait until September 2023 to take the PFL child bonding to get the paid benefits. So they don't have to wait. An employee can go out on OFLA or the protected organ leave or FEMLA protected leave. They could take their protected paternity, maternity leave under that program. And then when they come back, or if they're already back, they've been back, they can take, as long as it's within the 12 months of the baby's birth, another 12 weeks. So yes, if you have an employee who had a baby in January and took off 8 weeks to stay home with the baby and recover, come September 3rd, that employee can take off 12 weeks paid to stay and bond with that baby. This is the only time that that will happen, where it can happen twice in a year. Otherwise, this is going to be rolling on that 52 weeks. But because the leave, the paid leave is not starting till September, we didn't want to have to penalize the employees who took leaves for maternity prior to the start date. So yes, be prepared, employers. If you had a lot of pregnancies and you were like, we missed that paid leave Oregon thing. No, if it's been within the 12 months, they can circle back, men and women, because it's maternity, paternity, and take the 12 weeks bonding leave. And then last but not least, it does say, as we mentioned a couple slides ago, an employee is to give 30 days notice. So if you know you're going to go on leave, you know you cannot be at work, a doctor's told you to have a surgery, you're required to give your employer 30 days notice so that they can make arrangements for your absence. Of course, if it's an emergency, that's not going to require the 30-day notice, but you would had to make an effort, and it had to have been an emergency. You can't go out on, you know, a shoulder rotator surgery and be like, oh, I totally forgot I was going to do that. Okay, let me find my mouse.
Okay, so the paid leave organ and its coordination with other leave benefits. Here is some examples of what some of these leave reasons could trigger. So an employee has a serious health condition, and it's reoccurring multiple days, weeks, months away from work. Under the organ leaves, that would be the organ medical leave, not family leave. It would fall under OFLA, federal FMLA, and if the company also offers short-term disability, it could involve that as well. I'm going to just jump down under employee is injured at work. That would be no for Oregon paid leave, because that would fall under workers' comp, but that would be subject to the federal FMLA for job protection. If an employee is bonding with a newborn or fostering or adopting a child, that's not medical leave, but that would be family leave. OFLA, the federal FMLA, possibly short-term disability and other leave programs within the company, and Oregon sick leave. Down at the bottom, we have a statement that shows that an employer cannot require an employee to use their paid medical or use their time off first instead of their medical leave options. Former employees can't also use the event or use the leave program through your business. They would have to be a current employee. Anything else you think is worth pointing out here, Beth?
No, I think that vacation sick time is a common question employers ask. They're like, well, can I have the employee use their PTO or their sick time first? And you can't. Paid leave organs first. So if they go out on leave, that pays first. That's primary. Everything else comes after. I will leave with you food for thought though. Hagan Hamilton, we represent a lot of the local employers, and it varies, but if you know, some of them with those highly compensated individuals want to allow for PTO offsets. So you're going to have your medium to lower income employees who are going to be made fully whole on the paid leave Oregon. And then you're going to have your highly comped individuals who are not going to be made whole if they go out on leave. So allowing them to use their PTO, or if you offer a PTO bank, to make them whole. There are companies who are putting programs and policies in places so that, you know, that's an option. So everybody can be made whole while they're on the 12-week paid family leave.
And that's another benefit of still offering a short-term disability policy for those individuals that aren't made whole as well.
Okay, so employer obligations and responsibilities. This has another hyperlink, which is again to the Oregon Paid Family Leave website. They have a wealth of information. They have posters, which the poster says what the leave program is, how many weeks you can apply for, what's required. They have that in Spanish, in Mandarin, in French, in Russian. So any kind of language you could think about, the state has a poster in that language. And that's all your requirement is as an employer, is to post these posters up in the workplace where the other posters for employment are listed, letting them know that they have this paid leave available to them. Unlike most rates that employees have, most of all of them have paid attention to this one because it's affected their paycheck already. They've already seen the 1% come out of their paycheck. So they're very much aware that the program is coming into a place. So having those posters also just gives them the information they need to seek out to file a claim should that be their process, and maybe alleviate some of the questions that are coming into HR. Those notices were supposed to be provided, posted up in employers' places as of January of this year. If you have a private plan, the private plans also have notices. So if you're not with Hagan Hamilton, we're not sure why you wouldn't be, but if you weren't, then reach out to your broker, and your broker should get you the notice, the poster for that specific plan. And again, you put that in the break room, wherever you're putting your other employer posters, and the employees can just be directed there as to finding information to file a claim. Reporting responsibilities. Again, this is going to vary. So talk to your benefit specialists. If you're working with a private plans are each kind of doing their own little thing, but the state is following a quarterly report on your Form 132, which you already file and report with the state. That's your wages that you report to the state to pay taxes on. That's what they're going to use to process paid leave Oregon. So you submit your Form 132. It also shows the incomes and the deductions that you collected for the paid leave Oregon. And you're going to submit that quarterly. And then equivalent plans, you do annually have to reapply. So the state says, yay, you've been approved for a private plan. Annually, you go through that process every year. Anything you want to add, Stephanie?
No, did you click on the link because it didn't go anywhere?
No, I haven't yet, but I'm going to now. So on the paid leave, is it, oh, there we go, it's just slow. Are you seeing it, paid leave Oregon?
Yes.
Okay, so if you go under resources and you go to all resources, right here, all the model notices in all the different languages. All you have to do is download it, print it, post it. There's also fact sheets. So if a benefit fact sheet, that's going to help an employee determine how much they're going to get paid. There's actually a calculator on this website for the employees under that other site where they choose to submit a claim. It has a calculator if they wanted to kind of guesstimate what their payment's going to be. How to check employee contributions. So if you were doing your payroll and you're like, I'm not sure if I'm collecting the right amount, they've got information on that. Equivalent plan fact sheets. So what it takes to get an equivalent plan and when you can get an equivalent plan. All of that information is left on here. And then here under the guidebooks, these are fully encompassing books. You could do employer guidebook or employee. If you printed off a couple of the employee handbooks, the guidebooks, and just left them in the lunchroom, they're really good light reading. It goes through all of the information that's required, how to file a claim. Again, everything in just one little booklet. You have checklists, you have forms. So if you wanted to be part of the program and you're self-employed, there's a different form for you. So all of that information is accessible on the Oregon Paid Family Leave website. It's really robust. And then again, if you're working with a private plan, there are specific websites for each of the carriers.
Also on that website, under the employer tab, there's a toolkit that will enclose a lot of the information that Beth showed too. Instead of just selecting one thing at a time, you could download the whole toolkit.
Wealth of information. We just wanted to call out job protections. So if an employee has been with you for more than 90 days, their job is protected during a paid leave Oregon event. If they've been there less than 90 days, then their job doesn't have to be waiting for them when they come back. It's not protected. So that's something to keep in mind. If you have a business or your industry has high turnover at that 90-day mark, if an employee leaves for the 12 weeks, you have to somehow figure out keeping that job open for them when they return. Because remember, they can file right away. All I have to do is made $1,000 in a quarter, and come September 3rd, on September 5th, I could be like, hey, I've only worked with you for like 3 weeks, but paid leave Oregon's in place and I'd like to file a claim, and I'm going to be gone for 12 weeks. They're covered. They're eligible. As long as their leave is approved, then they're going to be paid to be off for 12 weeks. No discrimination or retaliation for employees taking or inquiring about paid leave. So, I think this one is probably for the guys on the paternity leave. You can't be like, oh, dude, you can't take paternity leave, and give them a hard time because they're taking paternity leave. No discrimination or retaliation. This program is available, and if they qualify and one of the 3 leaves, then their job is protected should they have been there over 90 days.
Also, if you're offering health benefits, the employer needs to continue to pay for the employer portion of those health benefits and make arrangements with the employee to pay their portion.
That's a good call out administratively, because the employee is not going to have paycheck to take their portion out of. They're going to be either paid by the state or they're going to be paid by your private carrier. So there's no payroll running through your company where you can collect their portion of the employee benefits. And it's kind of like maternity leave, right? So you usually upfront say you're going to take it out over the next amount of pay periods or make arrangements beforehand. But as an employer, if you're paying 100% or you're paying a bulk of it, 85, 90%, you're still required to pay that while that employee is off for 12 weeks. Okay, so private plans, I mentioned them a few times. We had great success with a lot of our employers who got to take advantage of that tax holiday. Again, that really only applied for employers who had 25 or more employees, because if you didn't, then you weren't required to pay the 40%. And at that point, what was it saving an employer, right? So for those who were over 25, private plans not only provided that 8-month tax holiday where they weren't paying the state the 1%, but they came back in a lot of instances well below the state. Between that 0.60 to 0.87 was a really common one. We have a carrier who is passing that out. And so now your cost is reduced from what the state is collecting. So your employees' tax that's coming out of their paycheck is less. So that's a benefit that you get to say where ours is less than the state when you're trying to retain and attract employees. You can also pay for the whole thing. In a private plan, the way that that contribution is cut up, you could say, look, we're going to go with the private plan. It's 0.87. We're just going to cover all of it. We're going to pay that out of our payroll as an employer and not tax the employees. So you have some variability and customized on these private plans. You can opt out every quarter. So Stephanie and I want to remind you, though you missed the 8-month tax holiday, and that's no fun, you can still take advantage of a private plan. And besides the lower rate, you're going to have the benefit of dealing with a private carrier who pays these kind of leave claims on a regular basis, and not a backlog that will inevitably happen with the Oregon Employment Department. So those are some really big pros to those private plans. And every quarter, the Oregon Employment Department will allow employers to opt in and opt out, both ways, vice versa. So if you were with a private plan and you're like, this is just not cutting it, I just don't want to do this, you can opt into the state plan and start doing the 1% payroll tax to the state. Or you can do vice versa and opt out of the state, even though you've already been paying that 1% payroll tax, and go to a private plan and pay a reduced fee and deal with more of a private professional claims payer situation every quarter. So the deadline for this upcoming 4th quarter is August 31st. And then after that, it will be the end of the month prior to the next quarter. So you're not locked into everything. You can still reach out to Hagan Hamilton if you haven't and you're interested in seeing what private plans look like, what a rate could be for your employees. We're happy to provide that. Anything else we should add on that, Stephanie?
If you guys happen to have any short-term, long-term disability programs already in place for your employees, having a private plan would be beneficial because the process of transitioning or coordination of benefits would be a lot more seamless than having the paid leave program through the state and then your disability through your private insurance company. So that's just one of the benefits of going private as well.
Okay, and as I mentioned a couple times, the next state meeting, so Oregon Paid Leave themselves, is holding a webinar. The next one's on August 10th from 3 to 4 p.m. This is a hyperlink, and we're going to send this presentation to Rhonda so she can disseminate it to the viewers who attended the meeting. This is also on that website. So Oregon Paid Leave, on their events and upcoming things, this link is also listed on that website. I'd recommend, if you have the time, to jump onto this one, because not for necessarily the presentation, because a lot of it will be redundant from what Stephanie and I shared with you today, but the Q&A, the specific questions that employers come up with and scenarios that they're experiencing, they're just invaluable, because we can't think of everything covering every base. And, you know, unless you're in it, you didn't think of it. So I would recommend joining if you have the time. And then we'll leave you if there's any questions, which surprisingly I haven't seen any in the chat. And then this is Stephanie and I's contact information: Beth at HaganHamilton.com, Stephanie at HaganHamilton.com. Really simple, easy to use, easy to remember. And we're here if you have any questions, even if you're on the state plan and you just want to pick a brain or you want a resource. We do have people at the state we're contacted or in contact with, where we can ask some of these weird one-off questions that are coming up that we never thought of. Anything, Stephanie? Thank you for your time.
Does anybody have any other questions? Or now's your chance to ask that crazy question, just like they said.
So this is Kathy from Blanche House. I do have a few questions. This may have been on one of the earlier slides very briefly, but can an employer require an employee to use PTO, so paid time off, before using Paid Leave Oregon?
No.
Okay. And then if you're using a PTO concurrent with Paid Leave Oregon to bolster pay, how does the employer calculate their PTO usage during that time?
So that's up to the employer and your policy. If you're gonna allow them to offset the PTO, like, so for those who aren't made whole, then that's an internal calculation of how you're going to do that, because the state is not going to tell an employer how much money they're paying an employee. They're gonna tell you a claim was approved, but they're not gonna say, we approved a claim for Melissa so-and-so, and she's receiving $1,200 and something a week. So you won't know how much to offset to make Melissa whole, because you won't really know. I mean, you could do a calculator and guesstimate, but you won't know what the state is actually paying them. So it's really an internal process if you want to allow them to offset to make themselves whole. I don't have any employers who are allowing PTO on top of paid leave Oregon.
Okay. And then, can you also clarify how paid leave Oregon aligns with FMLA? There was a
Yes.
brief mention earlier, maybe similar.
So they line up, except in the event of this first year, even though somebody could have taken maternity, paternity leave under FMLA before and have exhausted the FMLA benefit, come September 3rd, under the Oregon paid family leave, they can still go out on protected leave again for 12 weeks. Outside of that, if you're FMLA eligible, over 50 employees is how many employees you have to be required to do FMLA. Then if the leave falls under FMLA and it's Oregon paid leave, they're just running concurrently. Yeah, and that was on one of the slides too, I think, how they're coordinating that, which, yeah, because you have OFLA, Oregon federal leave, or, yeah, which is for 25 employees. So if you're an employer with 25 to 50 employees, you have OFLA. If you're an employer with over, you have OFLA FMLA.
Right, yeah.
I don't envy you guys at all. Yeah, so those leaves are staying. They did coordinate them so that they would run concurrently, but they're not going away. We're not replacing any of them with Oregon paid leave protection.
Yeah, sorry, I was misunderstanding FMLA versus OFLA earlier, so, okay. Thank you.
Yeah.
Right. Any other questions for the ladies today?
I don't
Well,
see anything in the
I'm
chat.
not seeing any. I would love to say thank you to both Stephanie and Beth. Thank you for joining us today. That is a very big topic, and I don't think we can gain enough information. And then again, state resources. I will be able to share out the PowerPoint that these ladies have shared today, so those slides will be available on the business support page on the chamber website probably tomorrow. So. And then, yeah, and I think they're available for questions beyond today if you have them. And then don't forget the webinar coming up on the 10th.
Yeah. All right. Thanks,
All right,
everybody.
okay. Thank you, ladies. Everybody have a great day.
You too. Bye-bye.
Thank you. Bye-bye.
Thank you.